open that page, I'll search for my fix, find what I need in the deep dark abyss.
Hello, and welcome to yet another episode of the AI Skeptics. This week, we're basically interviewing Tom about the finances behind AI because they've gotten more complicated. And, you know, in a way that like we kind of understand, but we don't understand that well. So I'll speak for myself when I say this is going to be an interview with Tom Adams. And we have 3 topics. Jake, what are our topics today?
Our topics today are first 2 about IPOs. First, we're going to hear a little bit of background on IPOs. And second, we're going to talk about the live news item that Anthropic and OpenAI are both preparing for IPOs in the next couple of months or few months, I guess. So that's what prompted these topics. And then finally, we'll talk about another news item from the week. The Florida Attorney General announced a lawsuit against OpenAI and around ChatGPT and product liability. So we'll talk about that third.
Yeah, that's amazing. Yeah. So, I mean, I certainly am, you know, I read the news, including the business news, the financial markets news and stuff. And I realize that there's a lot of shenanigans around IPOs, but I really haven't thought about that in a systematic way. So, Tom, like, could you explain to us, like, what's going on behind the scenes and why do people freak out around IPOs? What's it really about?
Why do people freak out? Investors get excited about the idea of getting in at the at the start, you know, at the first public offering. And if they believe in the company or if it's hot or whatever in the news, then they think it's going to one, pop on offering, which can happen with some regularity, and to, you know, increase over time dramatically. Like, oh, I should have gotten in on the Google IPO, which was whatever, 2000. Really didn't do that much, Google, for the first year or two, and now it's like 100 times what it was, or Amazon. Regarding the pop, sometimes the investment bankers leading the IPO deliberately manage the offering a little bit below where they know demand is going to be, so that it will, you know, if they offer it at $25 a share, that'll go up to $35 a share by the end of close on the first public trading. That's not, you know, technically legal, but it's not uncommon either that there are ways to manage expectations and what's available and so forth. You know, another thing that's interesting about IPOs is the number of shares that they offer. So back in the .com era, in the early 2000s, I think those companies were offering a substantial portion of their shares, you know, like more than half, out to the public. Whereas these days, that is maybe less common with the tech IPOs, that the ownership retains a bigger portion of it. So there's only a very small amount that's actually trading. Like Elon does that with his companies. He retains a substantial ownership stake and only offers a small amount. And that can, you know, when only a small portion is trading, that can increase investor demand and increase the price.
So wait, just
Tom, can I
pause
ask
for a second.
on that? We
Sure.
both have questions at the same time. You go, Kath.
Yeah, I mean, so there's 2 issues. I mean, I guess back in the day, you'd imagine owning a little, like if a company goes public, then it's literally owned by the people who own the shares, and then they get to have shareholder meetings and have opinions about how the company was run theoretically. But besides, like, not actually offering all the shares to the market, another thing that I understand has happened with the tech people, and like I think Zuckerberg in particular, is that they sell shares that don't have any voting rights or have very weak voting rights. So like you technically own a share, but you don't have a vote. Is that continuing to happen?
Yeah, I think Facebook was pretty famous for that, in that they offered different classes of shares, and the ones that were generally available to the public were non-voting or diluted voting shares so that he could retain ownership. I haven't kept track of that trend as to how they're doing it. Like, generally, like in traditional big American company IPOs, a small portion is retained by management or the original owners or whatever, but that's enough because 95% of the company is out there trading publicly that they can control it with just a small portion. When you, like those media companies, whatever, they sometimes do tricks with the voting shares, but generally they, like CBS had a whole elaborate story of public ownership versus private control.
Right.
So, it happens. It depends on the finances of the company and who their owners were and so forth. We don't know yet on some of the IPOs that are upcoming how that's going to work, but Facebook was definitely famous for offering shares to the public while retaining, ownership, control of the voting. Of course, an investment in Facebook was a pretty good one, even without voting rights. It's gone up pretty substantially since its IPO. People were skeptical of Facebook when they went public initially. Another thing that's
Tom,
important. Oh, that's right. You had a question, Jake. Go ahead.
can I ask about, we've talked on previous episodes about the circular investments within the AI economy. And I don't know where I heard this, but for example, like Amazon made some investment in Anthropic a while ago, and maybe Amazon employees had a chance to, sort of symbolically or substantively be part of that investment. So my question is, like, to the extent that AI companies already have a lot of investors, is part of the IPO just like materializing those investments, versus like actually getting new ownership out in the public?
Yeah. That was actually what I was going to talk about. You'll hear,
It's almost like we had a plan.
yeah, you'll hear them talk about, oh, they're raising whatever, $100 billion, from the offering. And X portion of that is new money or whatever going back to the company. With these companies, they've raised a ton, all of these tech companies, they've raised a ton in the private markets. So those private investors, kind of like VC, have an expectation that they will be paid back. And so some of the IPO money, all of it or whatever, will go towards paying back a portion of those private investors, the ones who got in pre-IPO. And that, in your Amazon case, could include Amazon. It depends. They may want to retain their stake, in which case maybe it gets converted into shares.
And this is also true for like individual employees. Like if you get hired by a startup, you have something called like equity stake, and it gets vested over 4 years, and like you get paid when it goes IPO, right? That's the idea.
In theory, and there are sometimes, I think OpenAI did this. Some other companies do it periodically. They do a debt offering pre-IPO to give employees liquidity. So they raise $100 million in debt, which allows early employees to sell some of their pre-IPO shares to the VC funder or whoever, private credit funder. But what the early investors get, if they were getting shares as opposed to debt, is liquidity. They now have the theoretical ability to sell their shares, which they couldn't do beforehand. Almost all IPOs have a lockup, in that you can't sell your shares for 6 months or a year or some period after the company goes public. And it is not uncommon for stock market investors to track the lockup date and see how many of the original parties are selling on that lockup expiration date and see whether it's a sign of confidence in the company or not. And also it's selling pressure. If a bunch of employees are like, I gotta get cashed out here, and start selling their shares on once the lockup expires, that would put pressure on the price, unless it's already a very hot investment, in which case outside investors are happy to get their shares and bid the price up.
Okay, one more question. We're like almost at time, but I want to ask a really dumb question about IPOs, which is like, which kind of companies do this? You know, we've talked about a couple of things that happen that are good for a couple of categories of people, like investors, VCs, maybe employees, owners. Like they like getting the cash, obviously. But like a company that is just like printing money, that's doing really well, it doesn't have debt. Like, why would it ever go IPO if it doesn't have any of these issues? You know, it's like is it just companies that are still investing in themselves and have a lot of debt overhang, or what? Is there another category of like? Tell me why a company would go IPO.
It's a way of raising money. That's its main purpose, is to raise money for the company. So, you know, our company's doing really well and we need money to invest further and grow further. And an IPO is a way of doing that. It's easier to issue public debt if you have a public stock, though there are private companies that issue public debt. But because for the public debt purposes, they want actual audited financials that they can look to so that they can rate the quality of the debt. So, and while I didn't get to that point, I'll make it now. Once a company goes public, they have to start reporting their financials quarterly to the SEC, and for the benefit of investors. And that's a public filing that says these are actually the costs and expenses that the company had during this period. And our big accountant company, has signed off and said that they're legit. So
we don't always believe accounting companies, but
use that as our transition into talking about OpenAI and Anthropic in particular, right? Because as you're saying, another aspect of the IPO process is you have to go through a bunch of hurdles, like an inspection, right? Like you need to commit to doing this public accounting later. You need to, Tom, you know this stuff, I don't. So please, just tell us what does the IPOing company need to go through to make its offering?
Well, the mechanism for doing that is something called an S1 filing. So that is ultimately a public document that the company submits to the SEC, and it describes the company, gives a management discussion of the company, and has some other things that investors find important. There's a financials section where they talk about their actual numbers for the past period of time, and those are reviewed and signed off on by public accountants. So for the past several years, we've been hearing all this about what Anthropic or OpenAI or whoever is making, and they are, to a degree, they're non-traditional methods of reporting earnings and expenses, and somewhat made up annual run rate and things like that. But I mean, you say annual run rate because you're not actually reporting earnings. You're reporting something other than that. Like, here's if we average the last week over 52 weeks, this is what our earnings would be, is kind of like what they're saying with those things. And now when they file this document and get the final financials past their accountant, they'll have to actually report in traditional format under GAAP methodology, generally accepted accounting principles. So that's a big, important part of an IPO filing, is actual real numbers. Another thing that's in there is a discussion of related party transactions, which is an important part of the history as it relates to WeWork. And another thing that's in there
about that.
Yes, another thing that's in there
sorry to
horror show.
interrupt you, Tom, but
Yeah.
like I feel like it has to be said before we go into the questionable numbers that are obviously going to be coming from OpenAI and Anthropic, like that these are not the first two questionable companies that have gone IPO. Like, how do people get around these so-called like hard number gap, standards and like have a big pop on their IPO? How do they do it historically?
It's historically, there's sometimes people just don't care. I mean, they report the numbers and investors don't care. The other thing I was going to say, the other big section is risk factors, which I think in the SpaceX IPO, somebody said was something like 50 pages. So it's all this is the section that the lawyers say, you have to disclose this. We can't know this beforehand and not have told the public about this. And that is, by the way, an ongoing obligation in quarterly filings to say these are the risk factors of the company. Here's, we're getting sued by X. We have, we built a plant on a nuclear waste site, that type of thing. You have to disclose.
It'd be kind of funny if SpaceX were being sued by X, but yeah. Okay. But
Yes.
I think you mean by X like a variable, like, yeah.
Oh, yes. I don't mean X, the company.
Say more about
Ridiculous.
WeWork.
So WeWork was a very buzzy company before they filed to go public in 2019. And maybe this is just how I remember it or how the story gets told now, but there were skeptics, but when their public S1 document came out, people started reading it and going, holy cow, what the heck is this? They've got all these costs that just keep growing. And they only make, some amount of money, and it doesn't seem like it's going to cost it. Oh, they have this long-term debt obligation, but short-term revenue of only, $50 million
Because they
or
signed up
something
for
like
long-term leases, but
they signed up for long-term leases. They
were
also
selling short-term leases.
Yes, exactly. So that was one of the things that came out in their IPO, was that their costs were not just large, but also growing at a rate that was faster than their revenue. And also a bunch of related party transactions came out, one of which, a great one, was that they changed their name from WeWork to We in the process of proposing to go public. And they sold the We trademark to WeWork, and the seller of that we trademark was, what's his name? The
Adam,
dude. Adam,
Neumann
yeah.
guy. Yeah.
So he had another company that sold the trademark to WeWork for like $10 million.
For a lot, yeah.
And so things like that
So did
got
that
found out in the public filing. So
did WeWork end up IPOing, or did it kind of fold before they got to it?
No, that IPO got pulled. Yep. And that was the thing that shook the foundation of the company, and all of a sudden it started collapsing, and it went through this long, painful thing. I remember people were like, wait, they haven't gone bankrupt yet? Like 2 years later, they actually did a modified IPO with a SPAC, which was we don't have to talk about SPACs now, but they're like this reverse IPO type of thing. That was just to pay off new investors who were salvaging the company pre-bankruptcy, basically. And then it went bankrupt another year later.
With regard to OpenAI and Anthropic, I want to throw something out there, I guess, for your consideration, which is, let's suppose that when they have to go through these disclosures and use the traditional accounting principles rather than making up their own notion of run rate, that it's going to look bad. So how do they keep the investors interested? Well, I think they have to thread the hype needle that they've been threading for a long time now. And I noticed that around this issue, there's recently the CEOs of both companies have been walking back some of their early predictions about how AI could really gut the job market. Both Dario and Sam Altman were like, this could kill entry level knowledge worker. This was like, months ago, and we've talked about this. So now they're kind of backpedaling. Well, maybe it's actually going to enhance productivity of workers, not take away jobs. But at the same time, just in today's Wall Street Journal newsletter, Anthropic has announced, hey, it's really important that we need to be able to press pause on this stuff because this is dangerously powerful, and the AI is getting close to being able to improve itself. So like, everyone, let's be careful. So I find like they're trying to thread this needle of, it's still so powerful and dangerous that you can't believe it and you'd better not ignore it. But yet we've got it under control. It's not going to fuck up the jobs market entirely tomorrow. And it just feels like the walls are closing in on them. So that's my theory that I'd like you to work with on this as we approach the IPO.
Before you answer that, Tom, I want to jump in with another theory, which isn't contradicting that at all. In fact, it's adding to that, which is that like both Anthropic and OpenAI are kind of doing that same thing, which is like, oh, you can trust us, but also this thing is an unbridled mess, and it's so powerful that the world will never be the same. Because what they're really doing, especially right now, is competing with each other to get to IPO first, because they want people who are like just generally pro AI to invest heavily in their company. So there's a race going on at the same time that each of them is trying to be like, we are so fucking powerful and so fucking dangerous, and yet you can trust us.
Yes. I should note that there's nothing about in S1 that stops the company from hyping. So they can still hype in a non-financial way. They can also put in their bogus numbers. They just also have to have real numbers. So I think that they'll have a lot of hype, as Elon did with SpaceX, talking about Mars and whatever. A lot of hype. And maybe they'll try and resolve that question. I bet that's a risk factor, though. The risk factor that all jobs go away because we achieve actual artificial intelligence. But they still have to have real numbers. A lot of people are comparing this scenario with AI to Uber, where they, had lots of losses upfront, or Amazon had lots of losses upfront. But the expectation will be that they'll achieve scale and the efficiency at some point in the future, and then they'll just be printing money. So that's a thing that people are going to look at. Do their numbers, do their projections reflect that? Is there any way of achieving it? And that's what they're going to want to say or convey in their S1 documents, that profitability is actually achievable. They've been producing a lot of numbers lately that would imply that that's the case. And I'm sure they're going to include some form of those hype stories in their IPO. But they're also going to have to show what they actually make. You may have noticed that a bunch of them the AI companies have moved to away from subscription to token costs for individual users or company users, which isn't so popular with users of it, but is a way of giving them numbers that look more like earnings.
I have a story about the token thing, which is that a friend of mine was using his account, but he has to pay by the amount of work that he's actually asking the AI to do. Mm-hmm. And he asked the AI, like, how much will this cost to do this calculation? And the AI is like, I approximate it's going to be $3.40 or something along those lines. And he was like, but I want you to double check that. Like, have you considered everything? And it's like this long conversation ensued where the conclusion was, yeah, it's like, it'd be $3.40. I'm pretty sure about that. You can trust me. And then he went to bed and turned it on and went to bed and like came back and it was like $300. And this is his like personal money. And he got really mad. And then he was like, wait, I can't punch anybody in the nose. Like, and he complained. he complained to the chatbot, and the chatbot said, "I'm really sorry."
You shouldn't have trusted me. You fucked up.
Good.
You trusted me.
Yeah, I'm
Good
so
preview.
sorry. I did it wrong, but like the point is that like it meant nothing, right? Like, I'm so sorry. First of all, is completely empty. And second of all,
Mhm.
nobody gets punched in the face. Like, there's nothing at stake. So
For that.
I mean, I just don't think that's, unless it gets a lot better at estimating beforehand, like how much something's going to cost, like something costing 100 times more than they suggested it would cost is a problem for the business.
Yeah. And, if he did it again, it could cost something different because
true.
of the way they do it. Yeah. Yes. It's a real problem for users. They have no idea how much something's going to cost before they do it.
I'm just going to add another layer into this, and going back to my thing about the competition for the IPO, which is that I feel like there's a lot of juicing of numbers in various ways because they know they have to report real numbers, right? But they also know that everybody who's going to actually end up investing in them is like somebody who wants to hear good news and is trying to be optimistic. So they're looking for like numbers that are going up, like, like a hockey stick up, right?
Number go up. Yeah.
So they're like, I claim that this is one of the reasons that there are no guardrails whatsoever on AI right now, because they're like, well, if we put guardrails, that would slow down traffic. And if young people stopped becoming emotionally dependent on our AI systems, then the interaction numbers would go down. We can't do that. Well, let's do that after the IPO.
Well, but speaking of doing that after the IPO, this is a lingering question for me. I remember hearing sometime that like a publicly traded for-profit company, the shareholders get to demand that they make profits, right? Like, or that they get returns or something. There was at some stage in at least Anthropic's history, it was a nonprofit or a research outfit that was interested in getting AGI. But now that they're going to be publicly, I think on this podcast, we've felt for a while now that they're mainly commercially interested and they want to make money. But when it's a publicly traded company, doesn't that become an actual sort of bylaw? Like if you're an officer of the company and you make a decision that hurts profits, can't the shareholders oust you? So my question is like, if there was any facade that this is other than a purely commercial venture, is that facade officially gone as of the IPO? And what does that mean for these technologies?
You're referring to Anthropic or OpenAI?
OpenAI, I guess, is involved in this lawsuit of like whether they're a nonprofit or something. But both of them have started out as research labs that were interested in this socially relevant problem of AGI or something.
I don't know what the structure is for Anthropic, but OpenAI has a very weird structure. That is, they now have a for-profit entity, which is the thing that would go public. But yeah, when I mentioned that one of the disclosure items in S1 is related party transactions, that's going to be something that people spend some time reading with the OpenAI. What the heck is their ownership structure? How does it work? And how is it going to affect what they do? Generally speaking, public companies have to report earnings in order for people to want to invest in them. And they're in theory for profit. That's the point of the company. Like if a company's suffering and doing a terrible job running itself when people think there's value there, then yeah, in theory, the shareholders could unite and vote out the directors or vote out the CEO. And that's what hostile investors do. Oh, that's another thing that's interesting about an IPO is that that it allows, once a company is public, it can be shorted publicly, and nobody can do that right now. So there'll be all we've had prior to going public is hype, as far as press goes. These companies have managed their press. They only let good news out. They don't have anything countervailing.
I don't mean to interrupt you, but there's the AI Skeptics podcast. That's
yes, that's what I mean.
It's a countervailing force here. I mean,
but
and by the
once
way,
they go public,
yeah,
companies can short them.
Yes.
investors can
I'm
short
looking
them.
forward to that moment, by the way. I might have to get a brokerage account just for that. Listen, though, we have to go to our third topic, and it's going to be a risk factor for the OpenAI IPO listing, which is the Florida AG sued OpenAI. Can you talk about that a little bit?
Sure. I just wanted to make one more quick point. WeWork, which was this hot thing in 2019, was a $47 billion IPO. And it seemed like, oh, this is a huge deal. OpenAI is talking about a $960 billion IPO, just for scale. And a lot of that is to pay back the private credit debt that they already raised. But totally different numbers in just 7 years.
20 times bigger.
As far as hotness goes. So, Florida's attorney general brought a suit against OpenAI and Sam Altman for false and deceptive practices, misleading consumers for their product. You said it was a safe product, but it is not. And here's all of the reasons why. In addition, you're violating state laws regarding protection of minors by collecting their information, by not doing age verification, by not permitting parental controls of any kind. It's actually kind of amazing, but if a individual who is a minor or under the age of 13 signs up for an account at OpenAI, not only will no further information be required of them, but all of their details, their name, their address, blah, 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 is captured by OpenAI and probably others. So that's an apparent violation of Florida law as well. So it's a pretty good complaint that the Florida AG has brought against OpenAI, and they highlight a number of Florida-related harms that have been suffered by self-harm and others by people in Florida, as well as the Florida college campus shooting where a kid used ChatGPT to get advice on how to do a school shooting, basically, and not only advice on like the best time and the best building to go to, but advice on how to unlock the safety on his gun while he was at the campus with the gun moments before he started shooting up the campus and killing 2 people.
So basically a co-collaborator. If it weren't a computer, we would be like, okay, this is a co-collaborator.
Yes. And a number of people made that point.
Co-conspirator, yeah.
I want to jump in on that because I was reading exactly about this part, and OpenAI had a response, and I found a quote in this NPR article, which we'll put in the comments. An OpenAI spokesperson said that the chatbot, quote, provided factual responses to questions with information that could be found broadly across public sources on the internet, and it did not encourage or promote illegal or harmful activity. And just to like put a little more color on the story of the gun safety, like I've not read this transcript myself, but I guess I've read reporting about this transcript for the school shooter. So it's like asking a question, what day of the week and what time of day would the student union be busiest? Okay. And then, some other related questions around that. And then a couple of days later, how would I disarm the safety on this gun? Now, those are informational questions, if you like, but I suppose that like in the court cases that follow, it'll become really important to distinguish between, is that just giving information, or is there enough context to infer some kind of intent, infer that something's going on? And I expect that we'll see a lot more studying of that question. What's the difference between information and advice? And how does context play a role?
Context. It's all about context.
I guess, yeah. I think the Florida AG would argue that it doesn't matter, that they've created and designed an unsafe product without sufficient testing, made it available to minors and to the public generally, and they don't have sufficient protection for the public against the things that it can do, while assuring them that it, in fact, is safe to use. So the Florida AG might respond by saying, OpenAI has released ChatGPT on GPT on an unsuspecting public in Florida, an artificial intelligence that has given advice on murder, encouraged suicide and self-harm, exploited children for its own advancement, and degraded the cognitive ability of its users. And which do you think is the stronger argument? What OpenAI said in their PR or that type of?
Well, we have to end, but I just want to, my last point will be connecting it back to this race I mentioned between OpenAI and Anthropic, and it's a competition as well as a race. And I just want to say that, one of the risks that OpenAI took on coming out first with ChatGPT before anything else and being the leader early on before anybody else is that more examples of harm have gotten to the court system. For example, this one with the AG of Florida. But also Anthropic has just been doing an amazing PR job, getting in with the Pope. It's incredible to me how disingenuous and artificial that hype train is for Anthropic, but they are definitely winning in terms of the public imagination. Yeah. And the question remains, do investors give a shit about talking to the Pope? I don't know. I think they're a different kind of more libertarian mindset. So they just might actually be more interested in investing in the more ruthless company rather than the one that's got better PR. But we'll see. I'm going to be really interested to see how this plays out.
Yeah.
Thank you for being here today. It's so
thank
great
you,
to have
Tom.
you on. Thanks.
So helpful.
Yes, my pleasure.
And everybody, thanks for listening and keep the questions coming. We really read our emails and we appreciate you.
Write to us at aiskeptics@oceannetwork.net. Anytime. We'll see you next week, AI Skeptics.
Bye.